What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to do macro technical analysis on the stock market, and we will look at all of the indices, the VIX and Bitcoin. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, first up we'll take a look at the SPX, and keep in mind this is a weekly chart, so every candlestick you're looking at does represent one entire week's worth of price action. Now, the first thing I want to start out by saying is how important it is to stay objective in the stock market. Right now, you can see what I'm zoomed out on is the entire bull market from 2020 to 2021, and you can tell how strong this bull market has been. The S&P 500 has not had a proper 10% correction this entire year, so that does tell us a stock market correction could be right around the corner. That doesn't mean we have to get one, and that doesn't mean we have to get one soon. But more than likely on a typical healthy stock market, you will see corrections of about 10% along the way. So if you've been trying to call tops this entire bull market, there's no doubt that you're having an absolute terrible time, because this stock market is still very bullish and it gets very shallow pullbacks before it continues to break out to new all-time highs. So you can see very clearly on this chart, ever since the election of 2020, the stock market started to run and never look back. And we really just had this volatile period here in about September of this year where we still didn't actually see a proper stock market correction, and now we're back on this very impulsive bull rally. So the first point I want to make is stay objective in this bull market, because it is a very strong bull market and there's obviously a lot of forces pushing the stock market higher that you don't want to try to fight. The trend is your friend, so trade with the direction of the trend and you're more than likely going to be on the right side of the trade. So I just want to get that out of the way up front, because it's very important to stay objective when you're trading the stock market, because nobody truly had price targets this high in the beginning of 2021. If in the beginning of 2021 somebody told you we're going up to SPX levels of 4,700 this year after how strong the bull rally was in 2020, you probably would have checked them into an insane asylum. So if you're staying objective and you were following the price action, you know that we continue to upgrade our price targets to hit these levels because we could see the price actions trying to get there. We don't want to make any assumptions, we just want to stay objective and follow the price action. So when I say follow the price action, that's exactly what I'm talking about. We're trying to make sure the price action is breaking through resistance, we're trying to make sure the trend is staying bullish, and we're trying to make sure the rest of the stock market is healthy as well. We don't just want to see one index looking bullish, we want to see all of the indices looking bullish, and so far that's exactly what we've had this entire year. So that leads me to believe we are definitely in a secular bull market. So I will continue to tell you, don't try to call a top and stay with the direction of the trend, because in a secular bull market, even if we do get a stock market correction, we will continue to break out to new all-time highs. So with that being said, let's go ahead and zoom in and start looking at the recent price action. And you can see that we are hitting a critical resistance trend line, but instead of getting a pullback and a correction through price, it does look like the SPX is starting to bull flag and correct through time. That means we're getting a consolidation period, and it tells you how strong this bull market really is. If we hit this resistance trend line and the bull market was starting to weaken, we would have started to see sharp selling and we would have started cracking down below the 5 EMA on this weekly chart. That's not what we got. Instead, we got 2 weeks of sideways consolidation, and it does look like the SPX is getting ready for another leg higher. That doesn't mean the next leg higher has to come as soon as next week, but it does look like we're getting a little bit of a bull flag consolidation, and we're going to start making another attempt at that resistance trend line. So remember, with resistance trend lines, they don't have to always push the price lower, because it is possible we break above that. To prove that point, I'm going to go to log scale here, and you remember this yellow line was my log scale resistance trend line, and you can clearly see the SPX has now broken above that level, back tested that level as support, and closed above that level for 3 weeks in a row. So when I show you a resistance trend line, you don't just think, oh my gosh, the stock market is done for, it can't go any higher. Obviously, resistance can be broken above and that can be turned into support, because otherwise you would never have a bull market that continues to make new all-time highs. So on the log scale, you can see a very bullish development 3 weeks above a resistance trend line that has absolutely called the top for every single pullback, going all the way back to the early 2000s. So without a doubt, breaking above that log scale resistance trend line is a very bullish development. So I'm going to go back to linear scale, and you can see that we are still near a resistance trend line, but we're not getting a sharp pullback from that level. So that does increase the probabilities we are going up to that next price target at SPX 4830, because eventually we will either ride that resistance trend line higher, or we will break above it, claim it as support, and continue to climb, as we could see SPX levels into the 5,000s going into 2022. So when we're in a secular bull market and all of the evidence says that we are with the price action and trend, there's no reason to try to call a top, and there's no reason to say SPX can't get to any level, because obviously it continues to defy gravity and it continues to go to levels that nobody thought possible. So let's stay objective, and right now we can see we clearly broke above that price target at 46.76 and we're continuing to climb higher. So point your eyes up there in the 4800s, because it is possible we could end the year at that level. From this week's close to 48.30 is another 2.9%, which is completely possible going into the Santa Claus rally. Now we do look like we are going to get a Santa Claus rally, but we did not have a true stock market correction this year. So if we are going to get a correction, it's going to come in December. However, that doesn't mean just because we didn't get a correction this year that we're guaranteed to have one, because there are other years in the stock market where we did not get a true 10% correction. So this could be another one of those history setting years. So don't just assume we have to correct in December because we haven't had a true correction yet. So watch the price action, and if we do start breaking down below about 4,600, then you could start to see a lot more weakness in the stock market, specifically talking about the SPX. But as long as we're above 4,600 and continue to have this strong bull trend, stay on the bull and point your eyes to that price target at 48.30. Going into next week, that resistance trend line will be right around 47.65. So that could be the next critical resistance level. And keep in mind, we can break above that level and claim that level as support. You can also see we're riding that upper Bollinger Band, which is usually a bullish indication, because we've been above that Bollinger Band for 2 weeks and now we continue to close near the top of that Bollinger Band. So we're just not seeing high volume selling coming into this market, and those Bollinger Bands will continue to expand, allowing the price action to go higher without any resistance from the Bollinger Bands. So looking at the SPX, everything is still looking bullish at this time, so we need to stay objective and we need to stay on the bull. Jumping over to the bear bull survey, we can see that we did have a reduction in bulls this week, going down 38.8% for the bulls, and we now have 33.9% of the people neutral and 27% of the people that are bearish. Remember, I always tell you, the more people we have in the neutral camp, the more likely the stock market is going higher. That's basically looked at as cash on the sidelines. And when the people that are in cash eventually see the stock market's going higher without them, they will FOMO in and continue to buy at the top, sending the stock market higher and higher. FOMO is a very real emotional thing in the stock market that you have to get over, because if you've not been in this market because you're saying it's too high and it can't go any higher, eventually your emotions will kick in. You'll see everybody making money without you, and you eventually will buy into the market much higher than you originally thought. More oftentimes than not, that will call a top and will go through a correction, and then you'll be sitting there wondering why you bought at the top and now you're holding the bag as the stock market goes lower. So reprogram your brain to buy low and sell high. Stop buying at the top and sitting in cash the entire bull rally. Get in on the corrections, get in on the dips, and set your risk accordingly. You can't make money in the stock market if you don't take on any risk, because you can't get rewards if you don't have any risk. It's a game of risk and reward, and the more risk you take, the more reward you can get. But if you don't take on any risk, just don't expect to get any reward. So looking at the bear bull survey, I don't see anything alarming about anything overcrowded in the bull trade, and more than likely it's going to tell us we're going higher, with too many people trying to short this market and too many people sitting in cash. Jumping over to the NASDAQ 100 NDX weekly chart, again you can see we are in a very strong bull trend with a very clear 5-wave Elliott wave count. Remember, when you get a 5-wave count, that does mean eventually you are due for a correction, because you will have to correct this 5-wave move. So without a doubt, with the NDX sitting at our resistance trend line and looking like a very clear 5-wave count, it does look like a correction is getting closer by the day. I'm not trying to tell you to panic sell and get ready for a correction, because we're still staying objective and we're still following the price action in the trend. But when you see something like this and it's a very clear 5-wave advance and you're sitting on top of resistance, you should absolutely reduce your risk. Just like I just got done saying with the bear bull survey, don't FOMO in at the top when it's very obvious that you're very near a top. I'm not saying we're at the top, but it's very obvious we are near a top. So when I say top, I'm saying a minor correction is coming before we can go any higher. And this is very easy to read on the chart. It usually isn't this obvious, but the NDX is just screaming in our face. We're finishing a 5-wave move and we're getting ready to correct. So we're either going to see weakness in the NDX in the month of December or very early in the year 2022. I can objectively say that because I understand Elliott wave, and if you don't understand Elliott wave, you probably think I'm contradicting myself by saying stay objective and then calling for a correction. But without a doubt, a correction is coming. You can believe me or not, but just be prepared if we do start to break down below about 16,300. If we start cracking below that support, the market will roll over and we will see a proper correction in the NDX. So right now, watch this resistance trend line, because this has been calling the pullbacks in this 5-wave advance, and there's no reason to believe we might not overshoot that level a little bit just to cause a short squeeze and then actually see the full-blown correction. That would go hand in hand with our price target up there at 16,932, and you could go ahead and round that up to 17,000 for a nice whole round number. So don't be surprised if we see a little bit of a fake out for the bears, get up to that price target, overshoot the resistance, and then come down and see that stock market correction early next year. That means we could still easily get the Santa Claus rally, hit the price target, and then see the full-blown correction very early next year. That makes the most sense, but we still need to take it day by day, and we don't just want to guess what will happen. We want to stay objective and follow the price action and let the price action guide us to the actual event. But right now it does look like a correction is right around the corner. So like I continue to say, don't FOMO in at the top. If you weren't buying down here when we were screaming go bullish, don't be buying up here at all-time highs and then wonder why you're holding the bag through the next correction. But overall, you can look at price action and see it's very clearly closing above the upper weekly Bollinger Band. So while that is bullish, it does tell us the NDX needs to take a chill pill and it needs to start cooling down. You can't continue to close over the upper Bollinger Band without any repercussions. And usually that means we're either going to get a pullback in price or we're going to do what the SPX did when it was above the upper Bollinger Band and we're going to start consolidating and trading sideways. So while the NDX does look very strong right now, these don't look like levels you should be chasing at. Remember, I continue to say I expect Apple to make an all-time high before the next stock market correction, and we can clearly see Apple is now sitting at an all-time high. Don't just think Apple has to continue to run higher. All of the evidence is very clearly in front of us that Apple is now at all-time highs, hitting my price targets, and the NDX looks like it's very clearly finishing a 5-wave advance and sitting on top of resistance. So do start locking in some profits and raising some cash because these are not levels you want to be over-leveraged at. But overall, we still have the strong bull trend, so the next stock market correction should be a buying opportunity, and we're going to get very good deals off very strong support levels. And I do expect to see a bull market next year, so I do think you should be buying these corrections. So watch that price target above at 16,932 and look for that breakdown below about 16,300 to see if the market possibly is rolling over. On the Dow Jones weekly chart, we can see that we had 2 red weeks in a row, so we're definitely seeing a little bit of rotation going into the blue chip tech names. And we're seeing a little bit of weakness in the financials and industrials. Now, when I look at this chart, I still see a very bullish chart, and people probably think I'm crazy because the Dow Jones has been selling off for the last 2 weeks. But if you look at this chart and you're being objective, you could see the Dow Jones has been going nowhere since May of 2021, just trading sideways and correcting through time. When you get a correction through time, that means you're going to eventually see a very impulsive breakout in either direction, and you can very clearly see the Dow Jones broke out to the upside. We had a very clear 3-week advance breaking out of the all-time highs, and now this is completely normal healthy price action to come back down and test that breakout before we get the next rocket launch higher. So I think this matches my analysis where I'm telling you the NDX looks like it's overextended and it's due for a pullback because that money will have to go somewhere else. If you know anything about the fiscal monetary policy right now, it's that money is better off going to work than it is just sitting in cash or sitting in bonds, and that money will absolutely go to work when it leaves the NASDAQ 100. So what I'm starting to speculate is that money is going to rotate out of the NASDAQ 100 and start flowing into the Dow Jones and the small caps. As you can see, that does match my technical analysis because we're going to backtest this breakout, which was the previous all-time high breakout after a multi-month consolidation. And now the Dow Jones is going to tap this breakout level, test it as support, and take off like an absolute rocket. And if you weren't in this rocket ride, you're very likely going to eventually chase it later. So you're either looking at my analysis and agreeing with me that this is a screaming buying opportunity for the Dow Jones, and this thing is about to absolutely go on a tear. I have the same exact analysis for the Russell 2000, so we'll get into that next. But look at this chart and see how long this sideways consolidation is, how clear this breakout was, and how closely we're retesting the breakout as support. So look for some fireworks in the Dow Jones in the next few weeks and possibly upcoming months, as we do start to see some rotation out of the blue chip tech names. We have a strong bull trend on the weekly chart. We're sitting on top of a macro level breakout, and that level is a support level. So look for a macro level breakout right around this level at 35,600 to test it as support, bounce, and continue to run from here. Also keep in mind, if the Dow Jones does break down back below this level and slices through these critical support levels right around 35,240, then I was wrong about this analysis and the Dow Jones already hit the top and it's going through a macro level correction. I don't think that's the highest probability chance, but we can't rule it out because we still haven't seen the confirmation bounce off support. So for now, this is just speculation that I think we're going to bounce from here and go into impulsive bull rally, but I'm wrong if we spend 2 or 3 weeks below this support level and we start to see the Dow Jones lose the bull trend. All right, now let's jump over to the main event, which is the Russell 2000, which I've been getting a lot of questions about. Just like I said with the Dow Jones, we can see the same exact story here on the Russell 2000, where we've been in a monster sideways consolidation going all the way back to February of this year. The Russell 2000 has gone absolutely nowhere. Now I need to zoom out to get this full picture because you can see before that happened, the Russell 2000 was in a very strong bull trend. It just went way too far, way too fast. And anytime something gets overextended, it needs to either go through a correction through price or a correction through time. It's very obvious looking at this chart that the Russell 2000 spent many months correcting through time, and we never actually saw a very sharp decline in price. So if you look at this green box I just drew, that is the correction through time in the Russell 2000. And anytime you get a correction, you usually resume the macro level trend. So without a doubt, you can see the macro level trend was very bullish. And then we went through this correction through time starting in February of 2021, and it looks like it started to end in November of 2021. So we had this very clearly bullish candle where we broke out of that consolidation, and now we're doing the same exact thing that we see on the Dow Jones, coming back down to the breakout level to test it as support. Now for the Russell 2000, the breakout level is actually a negatively sloping line because we did form a lower high before we went through and finished out the sideways consolidation. So that breakout level to test as support is right around 23.34, and we're sitting right at around 23.43. So we're very close to knowing if we're going to bounce off this level and continue this very impulsive bull rally. If I was a gambling man, I would say that we're absolutely going to bounce off this level and go back into another very strong impulsive bull rally, which does align with my analysis that I think the NDX needs to take a chill pill. Normally you'll see the small caps doing well when you see the large caps cooling down. It's money rotating from large caps to small caps because, as I said before, that money has to go somewhere. It's not going to bonds and it's not going to sit in cash. So if it's going to leave the large caps, you want to know where is it going to go next. Right now, if you look at the analysis, it looks like the Dow Jones and the Russell 2000 have the most to gain, with macro level breakouts retesting the breakout level as support, holding the full bull trends, and the price action still holding above critical support. So all of my chips would be on the bet that the Russell 2000 and the Dow Jones are about to see some fireworks, and a lot of people are falling asleep on these trades. They're thinking this is all just a false breakout, that these stocks have nowhere left to go but down, and that is exactly when you want to start buying stocks. If you want to puke on your shoes, that's the best buying opportunity. And right now, I can tell you that anybody that was chasing the Russell 2000 because they didn't buy it when it was sitting on top of support and they decided to buy it at all-time highs are absolutely wanting to puke on their shoes. They're sitting in a losing trade for 2 weeks now, and it just had one of the biggest red candles of the previous last 6 months. So without a doubt, there's a lot of people that chase the Russell 2000 that are ready to puke on their shoes and probably already selling for a loss. That's when you want to buy, and we're not even at the critical test of support yet. So watch that level right around 23.34 for a very strong bounce. And if we don't get the strong bounce, then you want to be a lot more cautious. So your make or break level on the Russell 2000 is going to be right around 2300 and our 20 simple moving average right around 2270. Those levels are your line in the sand that I was wrong about all of this analysis and the breakout was just a false breakout. However, just keep in mind when you get a macro level breakout of this scale, it's not normally going to be a false breakout. So the highest probability chance is that we're going to bounce off these levels as support and absolutely blow off the top into another impulsive bull rally. So as I always say, you want to buy low and sell high, and this is the definition of buying low. We had the confirmation of the analysis telling us we're breaking out and resuming the bull trend. We can clearly see the bull trend with all the moving averages stacked to the bull side, and we can clearly see the price action is still above critical support. So if you're staying objective, this is a screaming buy. If you're trading emotionally and you chase the Russell 2000, you're probably questioning some of your life choices right now and wondering why the hell you bought the top. So don't just trade on emotion, you need to stay objective here, and if you're staying objective, you can clearly see this is a screaming buy. If we're wrong and we take the loss, but we know where our risk levels are, and like I said before, if you don't take on risk, don't expect to get any rewards. If you just take on a bunch of risk and continue to sell for loss, you'll never be a profitable trader. So looking at this chart, I think this is a screaming buy for the Russell 2000. And when I check in on you guys in a couple of weeks, we'll see what happened with the Russell 2000. But I think we're going to be much higher. Jumping over to the VIX weekly chart, we can see we did see a little bit of a spike in volatility, but we're still well below that level at 18.2. All that really matters on the VIX is that we continue to close below 20. So there's not really much to cover here. It's very clearly in a downtrend and we're very clearly in a bull market. So continue to see the VIX trending down towards 14 if we don't get a close above 20. If we get a close above 20, that stock market correction is likely coming. So just watch the VIX at that level. And if we start closing above 20, just get a lot more defensive and a lot more cautious because we could see the stock market rolling over and finally getting ready to go through that correction we've been waiting for. On Bitcoin, we're back around that 60,000 level, and we can clearly see on the weekly chart, this is still a very strong bull market. I do my daily analysis on Bitcoin, and I've been saying buy the dip, and I still feel that is the right decision. Buying off of 59,000 and 56,000 will be great buying opportunities once you see Bitcoin up here at 75,000 or 86,500. Those are my price targets, but I don't want you to look at 86,000 until we clearly break above 75,000. You can very clearly see Bitcoin's in a bull trend, and you can very clearly see Bitcoin is bouncing off that support level at 56,000. So stay on the bull, and you can see this is a very strong support level because that is where Bitcoin was consolidating at all-time highs previously, and that now means that previous resistance is newfound support, which you can very clearly see Bitcoin is respecting that level. So buy the dip in Bitcoin because we have the bull trend, and get ready for that next price target at 75,000. I'm wrong if Bitcoin starts breaking below about 52,000, so that's your line in the sand to maybe reduce some of your risk if we start to see Bitcoin breaking below about 52K. But you can very clearly see this is a strong bull trend, and you can very clearly see that people are buying the dip off of support. So when you're following price action and you're following trend and you're staying objective, there's no other way you can read this chart but bullish, which means buy the dip and get ready for that next leg higher. Now, if you've been watching this long, I'm going to go ahead and throw in a little bit of bonus for you, and we are going to look at a weekly chart of ARKK because I do think that everybody thinks that Cathie Wood's trades are absolutely dead and they're never going higher again, and that is the definition of capitulation. When everybody is so sick and tired of something and nobody even wants to talk about it anymore or look at it, that usually means you're at the bottom and it's a screaming buying opportunity because you're about to go through a very impulsive rally. I think the ARKK ETF could be in that boat, and it does go hand in hand with some of my analysis that some of those large caps that are getting a lot of love right now will need to cool down, and that money will need to go somewhere. So if you look at ARKK, this is a weekly chart, and you can clearly see it's going into this sideways consolidation, and it's just wedging into a point where eventually we're going to need to see a breakout, and that does take us into about year end through December or early January. We're going to see a very monster move in the ARKK ETF, and it's either going to break out into the bull side or it's going to break down to the bear side, and we're going to see ARKK go back into a very strong bull rally or a very weak prolonged bear market. My chips are on the table that ARKK is going to blast through this upward resistance level and start going back into a bull market, and if you follow my day-to-day analysis, that does match what we've been seeing on the daily chart. So right now, I think ARKK could be a great buying opportunity at these levels as long as it's staying above about 110. If ARKK breaks below 110, I think you need to be a lot more cautious of a potential prolonged bear market, and I wouldn't go anywhere near this ETF. However, if ARKK can stay above 110 and break out above about 120 to 126, then I think you're going to get a very impulsive bull rally, and you're going to get a lot of FOMO buyers in these stocks, and ARKK could see the light yet again. We could see ARKK at a new all-time high next year, which means ARKK could be breaking out back above 160. Remember, this is macro technical analysis and there is some speculation here, but you have your line in the sand at support at 120 and the breakout level above 126. So look for those potential price targets, and I don't think we will continue to cover ARKK on our macro technical analysis, but I did want to throw a little bit of bonus in there for some of you that are still watching for this long. So jumping back over to the S&P 500, you can definitely see this is still a very strong bull market, and you can definitely see we're getting a little overextended at these levels, and we are due for a stock market correction eventually. I think that stock market correction is coming in the very near future, and when I say that, I mean at least the next 3 months. However, we need to stay objective and we need to follow price action and trend, and we don't want to bother trying to guess where the top will be. We just want to be prepared for when it possibly comes. So right now, I think you need to be preparing for that moment, start locking in some of those profits and raising some cash and getting ready to buy at much more ideal prices at strong support levels. I'm not saying panic sell all of your positions, because you always want to have a long position in a bull market, and you never want to just sell because you're getting nervous. If you sell everything and you go all to cash and you have no more long positions and this bull market continues to run higher without you, that is when you're going to FOMO in and buy at higher prices. So don't sell your long position in a bull market. You want to hold your long positions and you want to raise cash to buy the dip, and that is how you maintain a healthy, profitable, disciplined trading strategy in a bull market. You don't want to get overly greedy and have absolutely no cash, because that's how you can get caught buying the top and getting stuck holding the bag. I'm not saying we're at a top, but eventually we will hit a top, and if you have no cash to buy the dip, you're going to take a huge loss eventually and you're going to capitulate. So be disciplined and raise some cash the higher we go, and you can clearly see these are cash raising levels. So don't get greedy, even though I do think we're going higher. We never want to just take anything for granted, and we always want to be prepared for all the scenarios. Also remember that I am running a Black Friday deal on Bank Trade Alerts where you can get 67% off of your first month by applying the code Black Friday at checkout. You can find out all of the details on how to get the Black Friday deal on Bank Trade Alerts below. Remember that Bank Trade Alerts is a buy and sell alert system that only trades the TQQQs, and you can see that Bank Trade Alerts will make money in a bull market or a bear market and outperform the market. So if you're looking for a trade alert service that outperforms the market and sends you all of your buy and sell alerts, now is the best time to try Bank Trade Alerts with this 67% off discount coupon code. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.